Welcome to Trading Lounge and the SP 500 for the 25th of October. Starting on the 4-hour chart here, we'd been looking at the low here as wave 1 and 2 and 3 here, and an A and a B and a C here for 4, and then up for 5 here. So a bit more detail on the hourly chart here. We're looking at this in terms of wave 3 here, an A wave here, a B wave up here, and a C wave back down here for wave 4 here. That will probably, because it came high here, it will probably only come back down into this space here. So the 38.2% retracement level is down here, but yeah, it will probably, I mean, we can see that it's sticking to the 3,000 here. We do have a long position here. We did the right thing. We were above the level, above the closest largest number, and there was a signal, so we've taken that. Now the second signal that we can take is this signal here on top of this one here, because if I'm wrong and this doesn't come down through here, well, then we need to take the signals here. So if this moves up, we need to be triggered on the long side here as well for that. Simple as that. I don't know if I think I might even have the tick chart labeled differently, but we'll have a bit of a look here. No, much the same, so I'm not going to learn much from them. So look, in a way, this top here is the catalyst for the trigger to the upside there. Also want to have a look at gold as well, because we looked at gold before, and we've got well, first of all, we're at a medium level here, which is 1500. A medium level's halfway between two major levels, so major levels are 1000 and 2000, so we're in the halfway mark here, and we're seeing a correction across here, a classic trading levels pattern, and we could just even have a look at that actually. So this is a classic trading levels pattern. In my tiny little mind is that there's only really three things that can occur, three patterns that can occur at a level. That's if it doesn't stop or fail, and this is the most common one, and I call it the classic trading levels pattern. So we can just assume this is the 1500 here for this exercise. The arrival, the reaction in 3 waves, 5 waves up for the first high above the level, and then a corrective wave, and then up for wave 1, back for wave 2 here, and we take this one over here. So normally we're trading in any time frame, we would exit here and look to enter over here and basically miss the corrective pattern here, which we really need as the accumulation pattern for the next distribution pattern in terms of the trend. So in that case here, we've got the arrival, the reaction, the first high above the level, the ABC pattern here, wave 1, ABC for 2 here, and we're looking to take this high out here. But we should be able to get a smaller level, better position in here as well, but don't buy the breakout above, because it will come back at some point and retest the 1500. So you'll need, this is a daily chart, so you need to do that on an intraday chart. But yeah, so that little high in here is a place where you can go long there. But the reason for showing this, of course, is that if this pushes up, well, then it's going to place pressure on stock as well, and it could just fail from here. I mean, this could be viewed, all this could be viewed in a different way of more downside here. So this may not find support here and then just drop away from here. That's why it's important to find the first high above the level here and allow that to fall into place. So basically that pattern that we just talked about here, this one here, we want to see that on a smaller node over here, just in this space here, but you'll need to go into the hourly and tick chart and whatever to do that. But if this pushes up, this is going to place some pressure on the indices. Most of the time anyway, they'll be working in opposites, but they can work together. So yeah, alrighty. I just want to have a look at Amazon actually, because we'd been looking at Amazon. Okay, so on track when we looked at it yesterday, we were looking at this here being an A and a B and a C. So this is basically the same pattern we're looking at again. So the arrival, the corrective pattern here in ABC, and then 5 waves up for the first high above the level, and then another ABC pattern here, and then we can move in over here. But of course I'll refine that when we get there. And this 18 here is a minor level. And number 8 is a really important level, and obviously we can see that it's retesting the supply here. Supply just means sellers, and we basically, before we can, I mean, we can trade this up here, that's not a problem, but there is risk in that because, well, not really, because there's a 3-wave pattern just here, so that's pretty cool. So that will tell us that we will make new highs here. But in a nutshell, there's a lot of, if you're trading CFDs, then you'll be paying, and the leverage is very high here, so you'll be paying interest calculated daily, which is basically compound interest. So it can get a little bit expensive. They're clipping your ticket without you noticing it too much. But in a nutshell, we want it, it's resistance at the moment. We want it as support. That's it, and then we'll catch the trend. So this way we get our timing right in this way, and we don't have to pay so much interest because we'll just be in the trend at that point. Alrighty, yeah, okay. Thanks for tuning in. Cheers.
Report unless it's done.
Really?
They're sorting out some flights.